You know, I'm trying to figure out why one of my neighbors gave all of their life insurance proceeds to just one of their children. So let's talk about that in today's Wealth and Whiskey video. Welcome to Wealth and Whiskey. I'm Roger Kiger. I've been a financial planner for about 30 years, helping people build wealth and protect their legacies. We call these videos Aged and Unfiltered because I'm a little bit of both, but primarily that's the aged, and these videos tend to be unfiltered. So Wealth and Whiskey is about sharing things that, some people don't want to hear. A lot of those people are people in my profession. A lot of them are insurance people or financial advisors, or frankly, today some of the things we're going to talk about, some things that maybe you don't want to hear. Because I've seen a lot of mistakes that people have made over the years, and we need to talk about a few of them. So let's call them oh crap moments that can't be undone. So we'll call them OCMs for short. So why do these oh crap moments or OCMs happen? A lot of people get their information from the internet or AI, right? It's a whole lot easier to talk to AI or add something into the internet, at 6 o'clock in the morning or 11:30 at night when you're still awake and you don't know who to call or can't call somebody on the weekends. Just ask the internet. So is that information correct that you get from there? Maybe. How do you know? Well, you can get uninformed advice from anywhere. You can get it from your neighbor, you can get it from, the guys at the golf club, or, whatever your hobby is, whoever you hang your friends, internet. You can get uninformed advice from just about anywhere. But nobody knows all the facts that need to be applied towards that decision except you and maybe your financial advisor if you have one. So keep that in mind, that it's a garbage in, garbage out thing. If you don't know the right questions to ask, you're probably not going to get the right answer if you're just using the internet or AI to solve this type of problem. But today's OCM, as we'll call them, is, we're just going to call it generally beneficiaries. So a lot of issues that I've seen are around beneficiaries that either don't match the will, or people name the estate as a beneficiary, or they still have life insurance for their kids that they don't, and the kids are grown and the parents are still beneficiaries. So let's talk about those. Let's break them down a little bit, okay? So what do I say when I say beneficiaries don't match the will? Well, we talked about in a previous video that for a life insurance policy, it just doesn't matter who you name in your will. What matters is who's the beneficiary on that life insurance policy, because that is a contract. And that contract sends the money directly to that beneficiary, regardless of what your will says. So more often than not, what we've seen is young couples buy a life insurance policy when they're just starting and they've got a lot of debt and they've had their first child, and they name that child as the beneficiary. And then you fast forward 5 or 10 years, they still have the policy, it's doing fine. There's nothing wrong with it, so they haven't revisited the beneficiary thing. But they know, somebody told them it's time for them to get a will. So they've got a few more kids now, they've got some more assets now, they're getting a little bit older, so they do all the right things. They go get the will set up with the great estate planning attorney, and they're set. Well, what estate planning attorneys or any attorneys or most people don't do is the implementation after you do the will, which means the beneficiaries need to coincide with what your will says. And if you don't even do that, check the beneficiaries on the life insurance policy. Maybe you have 3 kids, you just need to update those beneficiaries. Well, do it all at the same time. Because if in your will you're naming 3 or 4 kids as the beneficiaries of your estate, your life insurance policy should probably match that. You can, in fact, name your estate as the beneficiary of your life insurance policy, and then everything will look at the will and say, let's distribute the life insurance proceeds the way the will says to do it. That's probably the easiest way to do that. Now, there are some problems with that too, but by and large, for life insurance, that's a pretty good way to distribute the life insurance proceeds. Exactly the same as the will is just to name your estate as the beneficiary of the life insurance. Now, don't do that as a beneficiary of a retirement account, such as an IRA or a SEP or a 401k. Why not? Well, if you name the estate or your will as a beneficiary of an IRA, the executor of your estate has to cash in that IRA, pay the tax, and then distribute the proceeds to all the beneficiaries of your will. See the problem here? There's the three little words that we hate to hear, which are pay the tax. We don't want to do that with an IRA. So IRAs should have their own direct beneficiaries that are your spouse or your children, so that they can roll those over or do a beneficiary IRA to minimize the taxes as they take that money out. So see, there's a lot to think about when you talk about just naming the estate as a beneficiary. And the mistakes I've seen is when somebody says, well, I don't know who I want to be the beneficiary of my IRA, so I'll just put the estate down for now. They never get back around to doing it. It's the same with people that buy life insurance policies for their kids when they're really young. You know, they want to make sure that if something happens to their kids, there's some burial policy because they can't afford to do that. Maybe there's a better use for parents' money at this point, to, 529 account or some kind of college saving, whatever. But we saw a client come up a couple of days ago. We were reviewing their life insurance policies, and we said, what are these two policies? Oh, those are policies we took out for our children 20 years ago. They're now 24 years old and 26. Well, they don't need a $5,000 burial policy at that age, right? They've been paying premiums on that policy for 20 some odd years. And the parents were the beneficiaries. Well, they need to revisit this stuff, look at the policies, look at your estate documents, and make sure they're all working together. You don't have to do it all the time. I get it. Nobody wants to spend time looking through those financial things, right? It's the I'll do it when I get time issue, because we just don't have time. We're busy. We got sports for the kids, school stuff, work stuff, parenting stuff. Got to take care of the house. There's a lot to do. But don't let that complacency get in the way of the needs of your family, because it will cost you, and it cannot be undone once something happens. So please remember to look at these things, check the beneficiaries, make sure they're all working together. And if you don't have time to do it, ask for help, right? Get a financial advisor, your insurance person, your attorney. Get somebody to help you do that, because it is really important. And again, it's something that can't be undone. So hopefully this has been helpful. If we can help you start your journey, please download the Legacy Blueprint in the link below. And please like and subscribe to our channel, because we don't want you to miss any other videos. So I'm Roger Kiger, and I look forward to seeing you again soon. Cheers.